Hi everyone and welcome back to the channel, and today's video is all about Bitcoin and the cryptocurrency market as a whole. Our last video 7 or 8 days ago up here was titled Bitcoin, the cryptocurrency buy zones, preparing for the final drop, and it's great to see because many people will now blame this move to the downside on that lawsuit that was announced to Binance or something like that. Some big FUD narrative that comes out as the big red candle to the downside comes into play once again, like with FTX down at 15,000, everyone calling for 12,000, saying, you know, this FTX narrative is one of the worst we've ever seen. How are we going to recover? And this narrative here that we've got for Binance and the SEC, potentially saying that some coins are securities. We've seen it before with XRP. XRP went on an initial dump. That was actually my first ever cryptocurrency buy when XRP lawsuit was announced. I bought loads of XRP, and from then on, it went to about 8 or 9x to the upside. So it just goes to show when you see these big red candles and the big bad narratives come around, with the technical analysis that we've been outlining over the past couple of weeks and really months, just saying we was preparing for this final dip, come in, take out this liquidity, get these targets to the downside, get this big bullish candle break fill down at these levels, 25, 24, 23,000. We've been preparing for it, but again, a big narrative will come around at the right time to make people scared, not want to put any money onto exchanges, and not want to buy any cryptocurrency yet. And it always happens, you'll get big bad narratives down at the lows and big good narratives up at the highs. So what I want to do is just take a little look at the Bitcoin market, take a look at the Fibonacci's, and really get some specific price targets. Now I know I made some specific price targets in my last video, but with this confirmation of that high there being a correction to the upside, we can get some even more lower time frame specific price targets to be looking out for on Bitcoin and the market as a whole. So guys, if you haven't already, smash this video a like, really appreciate it. Any subscriptions as well, also appreciated. Let's get into it. So just dropping us down now to the 4 hour, even more lower time frame, so we can get some really key analysis done on the lower time frame here. Sticking with the main idea of this being a free wave move to the downside and a free wave move back to the upside, that does mean we are going to be looking for a 5-wave move to the downside, and people might say that that's looking like 5 waves, and we could be done here, and they very well could easily be correct, which is why we've been looking out for these zones for the past couple of months. But one idea that I want to represent here is just the fact that this could very easily just be the big Fed wave that we're looking for, Fed of the Fed, even going down for a bit of another push down to the low, get people a bit more bullish, thinking the bottom's in, that we'll get a big bounce from the Fed wave, then go in for that final kill that we've been looking for, 24,000. So I think that's going to be the candle structure and the wave structure that I'm going to be looking for. Nice 1, 2, 3, 4, 5. Make people think down here that we've bottomed out. Big bounce, everyone gets really bullish, bit of exit liquidity again for the market makers to come down and build them longs down at them key levels, key psychological levels. And if you have a little zoom out here, that would take us back to them key highs that we've been looking for. You want to have it down as a zone. It's not just going to be a specific price level. This is the major zone that we've been looking for quite a while. The wave structure looks good for it. Perfect final dip down into the low. Obviously everyone would maybe enter down here, enter up here, going for them final stops, mass liquidations, comes in and fills the CME gaps on the lower time frame, and then really looks to prepare for that big move to the upside. And it could very easily just be a big massive Fed wave out of there, no hold bars, just leave everyone behind. Or we could go through a nice accumulation range once again, like we did down here. Or we could get something like this. We don't know. We can just anticipate and have them zones marked out in the in anticipation of what we're going to get. Look to set the bids down at these levels. You're not going to nail the bottom, just like you're probably not going to nail the top. If you do, you're probably just getting a bit lucky. So let's have a little look at the Fibonacci now, and we'll finish up there. So from the correction to the upside, that ABC that we are anticipating being an ABC to the upside, I'm going to draw a Fibonacci to the downside. So we've got a negative 27% there at around 25,121. I think that could be your upper limit for your bids to be set on the wave structure here. But really using the trend-based Fibonacci from the top of potential wave 1, using the Fibonacci, the lower bound of them bids I think are going to probably be around the 4.618. 23,800, 24,000 zone, 24,706. I would mark them zones out on your charts, guys, just to have that big range of where you're going to be setting them bids and not really care too much of what's going to be happening in the middle, because you're going to get a lot of chop. You're going to get a lot of people wrong-footed trying to nail the bottoms and nail the tops, putting in little stop losses to the highs and lows, and it will just wreck all the bulls and the bears. It's what the market does. It's great at that. It's really great at seeking liquidity, and that's all the market really is doing all of the time, seeking liquidity. So you need to think about where people are going to be placing their stops. There will be some stops below this wick, people thinking that's going to be the low, just thinking that's the low. Probably get a bit of a bounce, give them a bit of excitement, go out, take them stops. That's your third wave. Come back down to the 3.618. Get that big bounce again, create some more stop loss liquidity, then go in for that final kill. Everyone at that point would then think, well, I've been putting stops below all of these levels. This one's not going to work. I'm not doing it here. Then it leaves them behind, and that's the way the market works. It's market psychology 101. So, of course, you're going to get bad narratives, as we've discussed before, at the lows. So just take that into account, guys, when you're looking at the market in general. You're going to get bad narratives at the lows, good narratives at the highs, and you need to be able to ignore them emotions and ignore the narratives. Just stick to the charts and sticking to the plan. So that's what we're going to be doing, and that's what we're anticipating. So if you like this video, give it a like. If you don't, no problem. Comments and subscriptions absolutely appreciated. As always, it's not financial advice, but just remember to sit back, relax, and let the market do the work. And from me, take it easy, guys. I'll see you next time.